Guys, welcome to day 2 of the bootcamp. Today we're going to be speaking about candlesticks and terminology. The reason why I want to kind of emphasize on terminology first and then we'll kind of go into candlesticks is because I don't want to be speaking and you guys don't understand. I know if you're an experienced trader, this will be a little bit boring, but please bear with me because sometimes it's good to jog your memory back and it's good to just revise through the terminologies that day traders speak on a day-to-day basis. So we're going to go through the basic terms. So the top three, bid, ask, and spread. This is more towards your broker. This is understanding how your broker is because every broker is different when it comes to the spread, right? The spread is the distance between the bid and ask prices represented as transaction costs. This is a way of your broker taking money from you every time you trade, right? Now you're probably asking, what is a bid and ask price? The bid is the highest price a buyer is willing to pay for a stock or asset, and the ask is the lowest price a seller is willing to accept for a stock or asset. Okay. Then we got the bull market and the bear market. The bull market is a market characterized by rising prices, optimism dominates, and the bear market is a market characterized by falling prices, pessimism dominates. So, in simple terms, the bull market means that the market is going up, the bear market means that the market is going down. Okay, is as simple as that. Okay. Then we got long and short position. Now, this is terminology that I'm going to be saying quite a lot, especially if you're on my Discord server and you watch my live streams. I'll be saying these two terminologies a lot. A long position is basically saying that we are buying and expecting the market to go up. Okay, and a short position is we're selling the stock or share or whatever asset that we've got, and we're hoping to the market to go down. Okay, that's basically what it is, and we're gonna just keep going. We got order types. So order types, so we've got market order. This is actually very, very important actually. And the reason why this is very, very important is because when I first started off with trading, I didn't know about limit orders and all the different order types. I just thought you just buy and sell, right? But market order is an order to buy or sell immediately at the best available current price. So as soon as you click that buy, as soon as you click that sell on MetaTrader 4, you will see at the top, it will say market order, or MetaTrader 5, it will say market order. Okay, then we got limit order, an order to buy or sell a stock at a specific price or better. So sometimes if you're experienced as a day trader and you kind of understand how day trading works and you see price at a certain level, but you say this is too expensive or too cheap for you, right? You can place a limit order, which basically gets triggered as soon as price gets to that level, and then it'll be a buy or sell from there. Then you got a stop order, okay? In other words, stop loss. And this is very, very important, guys. You need to understand stop loss. Stop loss is an order to buy or sell a stock once it reaches a certain price, and it helps limit your losses, okay? Guys, if you're a day trader, you have to have a stop loss. I'm going to keep reminding you for the rest of this boot camp, but we're not them type of traders that do not have a stop loss. We have a stop loss. If you talk to every successful day trader out there, or every successful trader actually out there, they're going to say there's one thing is having a stop loss on every single trade. This helps you limit your losses and it helps you cut those losses and move on to the next trade. Okay, we have take profit. Take profit is an order to close a trade once a specific profit level is reached. Okay, again, it's in the word. You're taking the profit from the market, you're securing it. Anyone can show you in the market of me being or them being $1,000, $2,000 up. That doesn't mean anything, guys. Okay, I learned this the hard way, and you guys have probably learned this already, or you haven't, but you will do. Is that price can go up and down, it can go into your profit, it can go into your loss throughout that trade. Okay, you as a trader need to be able to understand where that level of profit that you like, or in the markets, wherever it is, and you close that trade and secure that profit. That's your decision as a trader. It's not my decision. It's not the next door neighbor's decision. It's your decision. So that's why stop loss and take profit are very, very important. And there's one more order type, which is called trailing stop. And that's basically a stop loss order that adjusts as the price moves in favor of your position. So a lot of people's trading strategy can have a trading stop. Me personally, I don't use a trailing stop, but I do trail my stop to break even when it comes to my trades. Now, later on in this bootcamp, you will understand how my strategy is, but this is just the terminologies for now, okay? Then we've got key indicators. So the first one is moving averages. Now, just before I continue, guys, I want you to understand there are many more key indicators out there. There's many indicators actually in the market, especially if you go on TradingView, you can scroll through. These are the main ones that I believe as a trader you should just know. Even if you don't use it, you should just know anyways, because sometimes it's good to use these as confluences, okay? So moving average, which I use, is a calculation to smooth price data over a set period to identify trends, okay? RSI, or in other terms, Relative Strength Index. This measures the speed and change of price movements, indicating overbought or oversold conditions, okay? Again, another way of giving you that confluence of whether the market is overbought or oversold, okay? MACDs. This is another word of saying moving average, convergence, divergence, right? Big mouthful of words there. It's basically a trend following indicator that shows the relationship between two moving averages. Okay, it's simple as that. We've got volume. Volume, again, very, very important to understand what volume is the number of shares or contracted traded in a given period, showing the market's activity, right? So the more volume there is, the more liquidity there could be because more traders trading at that moment of time. Okay. Next one, which you guys probably didn't even realize was an indicator, but support and resistance, okay? Support is a price level where a downtrend pauses due to demand, and resistance is a price level when uptrend pauses due to selling pressure, okay? Now, you probably didn't realize this, and the reason why I put it as an indicator is because support and resistance is not a guaranteed buy or sell. Okay, support and resistance is just an indication what happened in the past of the markets, and it indicates to us as a trader that okay, cool. Last time price was at this zone, we bought, so we might be able to buy again. And likewise, in resistance, it sold, we sell again. Okay, now there's different types of markets and analysis, right? You've got the forex market, which newsflash, guys, I am going to be teaching you the foreign exchange market where currencies are traded. But we have other markets as well. We've got the equity market and the crypto market. I'm not going to be showing you how to trade the equity market or the crypto market or the futures market. But the strategy that I'm going to show you, you can use it on these different markets, but you have to tweak it a little bit. But as a trader, when you become more advanced and you start to learn more about the markets, you can tweak it with my strategy. Okay. So the equity market is a stock market where shares of companies are bought and sold. The crypto market is a market for trading digital currencies like Bitcoin, Ethereum, the whole pump and dump system, the whole meme coins. That's the crypto market. Okay. We then have the technical analysis and the fundamental analysis, okay? The technical analysis is analyzing price charts and trading volume to predict future price movements, okay? That's what I use as a day trader on a regular basis, right? But some traders don't use technical analysis. Some traders use fundamental analysis, and fundamental analysis is examining financial statements, company performance, and economic factors to value a security. In other words, trading based on the news, trading based on the tweets that Donald Trump be sending, or going based on other external factors, but not looking at the technical side of the markets. Now, technical and fundamental traders, they collide. They don't actually like to play together. So for me specifically, I have chosen the technical analysis side, okay? But if you want, you can do both. You can go to fundamental analysis only. But me personally, I would advise you to go for more of technical analysis because it makes sense. Because the fundamental analysis, you need to learn a bit more. You need to understand how the market is. You need to understand the terminologies. You need to understand all the different things. And guys, if you see me keep looking this way, is because gold right now is flying. Yeah. So if you keep seeing me looking that way, it's because gold is flying and I wasn't able to place a trade. But it's fine. We're going to keep going. Okay. Now, a little bit more advanced concepts. These are things that you need to know as a trader. And these are things you're not just going to find out there, right? Information. You're not going to find this information out there. You actually have to look for it. Okay. And I made it easy for you. So leverage. Leverage is using borrowed money to increase the potential return of an investment. Okay. We as traders can make use out of leverage. And I didn't know this until like my second year of trading. Okay. as a day trader, if you have a small account, let's say like $50, $100, $500, right? And you're doing a one-to-one, you're not going to be placing high lot sizes. You physically can't, right? But if you have a 1 to 500, meaning that every $1 that you have is multiplied by 500 times, right? That's called leverage. And you are leveraging, you're borrowing a little bit of money from your broker to increase the return of investment, to increase that lot sizes that you're using, okay? Then we have margin, the amount of money a trader must deposit to open a leverage position, okay? If you're a trader and you have never blown your account, well done. But if you've blown your account, you will know what margin calls are. And I've had multiple emails, I've had multiple alerts telling me I've hit my margin calls, right? I've hit it and I'm about to lose all my money, and the broker will end up closing my trade for me because I'm basically blowing this account. Okay. I've been through it many times when I started off as trading. Guys, is not a good, it's not a good feeling. It's actually a horrible feeling. And you don't want to you don't want to get to that margin call area. Okay. And by the end of this boot camp, guys, I'm going to make sure that you guys will never ever see a blown account, and you never ever get them margin calls because they're horrible, right? Volatility is a measure of how much the price of a stock or asset fluctuates over a period. You might hear me say the market is very, very volatile. That just means that the market is moving very, very fast. Okay. It's just a fancy term to say the market is moving very, very fast. You're going to actually realize later on that there are very, very easier ways of saying things, but we as day traders want to make it fancy. I don't know why traders do this when we could just speak in simple terms, but that's what traders do. And you got to learn it because that's how everyone speaks in the day trading realm, right? Liquidity is how quickly an asset can be bought or sold without affecting its price, okay? So you're going to hear a lot about liquidity grabs and the market is very, very liquidity, right? When traders say this, it basically means the market is flown up or flown down to a certain price level and then corrected itself quickly. I'm going to show you examples in throughout this boot camp as well of liquidity. But liquidity is very, very important to know because liquidity grabs can trap you and it can make you lose money in the markets. You don't want to fall for that trap. Now, there's 3 different types of trading. Okay, you got scalping, swing trading, and day trading. I am specifically going to be teaching you day trading, and my day trading will help you with swing trading. You can use my strategy and whatever I'm teaching you as a scalper, but just know as a scalper, you are going to fall into a load of more traps. You are going to be placing a little bit more trades, and you are going to be in and out of the market a little bit faster than what we do. Okay, so scalping is a strategy involving frequent trades for small profits. Okay, if you're a scalper, do not expect yourself to be flipping accounts. Okay, expect yourself to have smaller profits, but they're compounding. Okay, we got swing trading is holding a position for several days to capture short to medium term gains, right? Something that I'm not really interested in because I don't really want to hold my trades for more than like a day or two. But some traders out there want to swing trade and hold it for several days, right? I like to actually capture my profits, right? So that's why I chose day trading. Day trading is buying and selling securities within the same trading day. Okay, that's what I do. I will buy gold on a Monday, and on a Tuesday, I can sell gold. Okay, and I can make money on both days. Okay, and that's the power of day trading. Risk management and psychology. Okay, we got risk to reward ratio, the ratio of the potential profit to the potential loss in a trade. Okay, so guys, if you are trading and you have a 1-to-1, that means that you are risking $1 for $1 return. Okay, if you're risking below 1-to-1, forget about it. Don't even worry about that trade. That's just stupid trading. Okay, that's basically gambling. You don't want to do that. Okay, for me personally, my risk to reward ratio is always going to be higher than a 1-to-2. My ideal risk reward is 1-to-3 and above. But if I do have a 1-to-2, I'll still take it, but I'll lower my risk. Okay, but risk reward ratio is very, very important when you are a trader. Okay, position sizing is very, very important. Determining the amount of capital to allocate to a particular trade. Okay, you need to understand the position and the size of that position in every single trade. You can't just put all your money in on one single trade. You need to make sure that you are kind of putting, let's say, 10% or 5% and getting a little bit of returns, and not using all your money in one trade, and actually just using your money as like a security for your trades. Okay. Then fear of missing out, FOMO, the anxiety that comes from seeing other profiting from a rising asset and wanting to jump in. Okay. When you're in my Discord server, when you are in other people's Discord server, whatever it is, or when you're watching other people trade or watching me trade, you're going to see me in profit. You're going to see your other friends in profit, right? That doesn't mean that you chase an account. Okay. It doesn't mean that you chase that trade. Okay. If you missed a trade, you missed a trade, leave it, move on. Okay. The reason why I put this over here, I could put greed, I could put other things. The reason why I put FOMO is very important, is because that's what affects beginner traders the most. Okay. Greed comes in a few trades after, right? But fear of missing out can happen as soon as you trade, right? For example, if you're trading crypto, you have a lot of FOMO, right? Because you're seeing other people make money, and that's why you're in crypto. There's so many people in crypto, right? They don't even know what is crypto. They're just trading it because other people make money. And that's the same thing with Forex, the same thing with futures, the same thing with all the other markets out there, right? Just please, guys, don't fall for this trap of fear of missing out, okay? Please, okay? We got some economic indicators. Now, guys, this is very, very important. If you can take a screenshot of this, because even though I said I don't trade with fundamental news, it's good to know this. It's good to understand this, okay? So we're going to go through this as quickly as possible, because I know you guys want to see the candlesticks, right? But GDP is basically gross domestic product, the total market value of all goods and services produced within a country. Okay, that's all you need to know. You don't need to know the stats. You don't need to know all of that. Just know what GDP is. Okay, because when you go on my Forex Factory or whatever it is that you look, daily effects, whatever it is, you need to know these terminologies. Okay, interest rate, the cost of borrowing money, a key factor that influences stock and Forex markets. Okay, interest rates very, very important, and that's what can affect the market, especially if you're trading gold or currency pairs. Okay, inflation, the rate of which the general price level of goods and services rises, eroding purchasing power. Okay, inflation, guys, if you are watching this in 2024, you would know that we are going in the UK and America, we are going through a huge inflation and a huge crazy interest rates, for example, housing rates and things like that, right? So you kind of heard this before, but it's good to know this just to have in the back of your head, because once you know there's more inflation, you know that there's less money getting once you hear inflation, you know that money is getting printed, and you can look at it into the markets, okay? Unemployment rate, the percentage of the workforce that is jobless and actively seeking employment, right? Again, very, very important, because the unemployment rate can affect the markets, which not many people know, but it can, right? So can inflation, so can interest rates, so can GDP. The last one, which is my favorite, right, is non-farm payroll, a key monthly report in the US showing employment trends affecting Forex and stock markets. Guys, this is very, very important, because I don't like to trade news, but NFP used to be my favorite day, because I used to call it payday, because that's where the market is very volatile. Remember what I told you about volatile? Yeah, I hope you are keeping in track with the terminologies. Okay, so NFP is very, very important, and it makes the market very, very volatile. You can make a lot of money, but you can also lose a lot of money as well. Okay, candlesticks, right? So what we're going to do is we're going to go to the charts, but before we go to the charts, I want to show you this cheat sheet that I created for my students, and I want to share it with you guys as well, because it's very, very important to have this cheat sheet. Okay, so let me get it up. Here we go. So we're going to have the bearish candlestick pattern cheat sheet up. Okay, so this is candlesticks. Okay, now I will show you the markets. I will show you all the candlesticks in the markets, but I want to kind of show you first the candlestick patterns, because you don't really need to know exactly how the candlestick works. You can just use these this cheat sheets and actually just start making money straight away, right? Obviously, these candlestick patterns are not they're not like 100% accuracy. You are going to see a little bit of losses if you keep following it. You can't follow it with the blind eye, but what you can do is you can follow it and use it to have good indication of entries. Okay. So these candlestick patterns are very, very important when it comes to you entering the market. Okay. So what I advise you, I'm just going to go through with it, but what I advise you is if you guys can take a screenshot of this, or if not, in the description below, I am going to put the link to my Discord server where I share these candlestick patterns. Okay. So the first one is Evening Star, one of my favorites. I use this on a day-to-day basis. Second one is called Hanging Man. By the way, guys, I did not make up the names for this. This is just what the name of the whoever created this is. They named it this way. I didn't name it. I just look at it and kind of know what it is, but it's good to just kind of link it with a name so you can, when you're speaking to someone, you can say, oh, this is the Hanging Man. I know it sounds corny and I know it's not something what it looks like, but it is what it is. Okay. You got the black cloud cover. Okay. Sorry for the typo there, but this is the black cloud cover. Okay. Basically, this involves a bullish candlestick and then next to it, a bearish candlestick that's kind of hovering just above the bullish candlestick. So it doesn't cover the lower, but it covers the higher, right? This is showing that, okay, cool, we could be in the bearish movement. Okay. Evening Star is a bullish candlestick, an indecisive candlestick, and then a bearish candlestick. Okay, I'm going to go through what a candlestick is later on, but I just want to show you this cheat sheet because I know most of you probably already know candlesticks, and if anything, you can always go on Baby Pips and see it for yourself on what candlesticks are. Okay, I will go through it at the end of the video, but I want to just show you guys the patterns because this is what's going to make you money. Okay, so bearish bearish pin bar. This is where you just see basically the Hanging Man, right? Where you see bullish candlestick, the Hanging Man, or like a doji, or whatever it is, and then a rush of bearish candlesticks. Okay, this is what a bearish pin bar is. Okay, you got the bearish harami. Harami is Japanese for a pregnant, black pregnancy. So this is basically calling this candlestick pregnant, right? And it's basically a bullish candlestick following after. After that is a bearish candlestick, which is kind of inside this bullish candlestick. Okay. Then we got the bearish Marubozu, sorry. Bearish Marubozu is a full body of a candlestick, full bullish candlestick. Okay. Then you got the three black crows, is basically three very identical bearish candlesticks. They're not always going to be identical, but usually when you see these three, you know that we are going for a bearish trend. You have a tweezer top. Tweezer tops are basically where the top of these bodies are basically aligned, okay? And the wicks are kind of aligned. They kind of look very similar, okay? Sometimes they're similar in sizes, sometimes they're not, but this is the example that we have. And then we got the bearish engulfing. Bearish engulfing basically means when the body and the wick is covering the previous candlestick, right? The previous candlestick has to be bullish though. It can't be bearish, it has to be bullish, okay? And that's the bearish candlestick, okay? I'm just going to show you the bullish candlestick patterns as well, right? So you got the morning star. So in the bearish one is evening star, bullish one is morning star. This is a bearish candlestick followed through with a doji or indecisive candlestick and then a full bullish candlestick, okay? Inverted hammer and the hammer. You're going to see these quite a lot in the market. These are basically saying that, hey, look, we are going for a bullish trend, okay? When you see these, don't just go for a buy. Obviously, these are just indications of us entering the market. Make sure you are backed up with other data as well. You got the bullish pin bar, which is basically the opposite of the bearish pin bar. You got the bullish harami, which is basically the opposite of the bearish harami, which is basically the bullish candlestick is like the baby of the bearish candlestick. You got the bullish Marubozu, which is a full bullish candlestick. The three white soldiers, which is three candlesticks consecutively being bullish. They don't have to be identical. In this case, it's identical. If it's identical, it's even better. We got tweezer bottom. So if you see the market doing this, where the bodies are basically aligned and is at the bottom, you're going to see the market go up, okay? And then a bullish engulfing. My favorite ones are the engulfing candlesticks and the morning and evening star. I don't really like any other candlestick patterns, but if I see it, I will trade it. Okay. And this is basically the bullish engulfing is when the bullish candlestick is covering the bearish candlestick, right? It's basically it's swept the lows and the highs of the bearish candlestick. Okay. So that's pretty much it when it comes to candlesticks. Guys, I'm just going to quickly show you now. I'm just going to go to the market. I'm going to show you, if I just go to trading view, I'm going to show you guys the market, right? And I want to kind of, let's just go to any pair that I haven't really looked at before. Let's just do this. Okay, cool. I'm just going to hide this for a second. How do I hide this? There we go. Hide. Let me hide all my indicators. Okay, there we go. So guys, when we're looking at the market, I want to just quickly show you something. So when we are looking at the market, how does a candlestick form? So when a candlestick, the way candlesticks are, is we have price opening, right? So let's just say this is when the price opened. Now, what happens during that opening, depending on which time frame we're in, right? But let's say we're in the 15-minute time frame. So within the 15 minutes, price will go up, price will go down, okay? And price will keep doing that, and price will keep moving until the 15 minutes is over, okay? The 15 minutes is now over. What price will do is it will build, if I can get shapes up, where is the shapes? There we go. Price will build something called a candlestick, okay? And when we see a candlestick, right, which I'm going to add a border to as well, and I'm going to make this a bullish candlestick. So we're going to do it blue and have it really like this, and the border will just keep it black, okay? We'll have something like this, okay? Now, as you can see, we still have some points poking out, okay? Now, what that is basically wicks, okay? So these are wicks. So when you see something, when you see a candlestick, so this is called a body, okay? Which I'll type it, body, okay? That's a body, okay? This blue thing that we've drawn, right? And the little lines on the top and bottom, that is called, okay? Sorry guys for my drawing. I know it's terrible, but bear with me. And this is called a wick. Okay. So you got a wick, body. Okay. Now, depending on which candlestick it is, if it's bullish, the top bit is the open. Oh, sorry, the top bit is a close. The bottom is open. If it's bearish, the bottom is going to be the close and the top is going to be the open. Okay. I know that sounds very confusing, but I will show you examples on the market as well. But in simple terms, is this shaded area is the average of the market, and the wicks are basically where the market. We don't really count the wicks as a day trader. We don't count the wick because it doesn't exist. Okay, when you look at the market in a line graph, you're not going to see the wicks. You're going to just see where the body was, and that's the most important thing in the market. Okay, obviously you're going to see some markets where it's like this, right? Where the wick is longer than the body, right? If it's like this, and this is, let's say, for example, blue, right? This is strong bullish, right? If you see the market where it's like the wick is longer than bigger than the body, okay, this is basically indecisive candlestick. So when we look at the cheat sheet, right? I know I haven't really gone through the candlesticks as much, but the reason why I'm kind of rushing through this bit is because it's not as important as just learning and memorizing the candlestick cheat sheet, right? You can literally memorize it and go through it. But it's good to understand the story that the market is giving you, okay? And every candlestick is a story. So what I'm going to do, let me just delete all of this. What I'm going to do is I'm just going to show you some markets. Let's go on Euro USD. Let's go on the daily chart. let's get this back up and running. Okay, so I'm just going to show you some markets so that you can kind of understand how it works. So for example, let's look at this candlestick, right? Let's zoom in. Let's look at all the candlesticks from here all the way to here, right? So we had a bullish, strong bullish candlestick coming to a bearish candlestick. Now, the reason why the market went down was because we had a strong bullish move. But what happened with this bullish move? Well, what happened is price said, no, we are too high, right? And because we're too high, they were like, okay, this is the maximum amount we're gonna go to, right? So then what happened is we then had price come down. Okay, price came down, 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 and what did we see? 3 bearish candlesticks. Okay, what does that mean to us? That this is the market going down. Okay, simple as. Then we go up again, quite good Marabozos, right? Going up, right? And the reason why I'm just kind of slowly rushing into this because I don't want to make this super long and bore you guys. We are going to go through candlesticks a lot more later on in the boot camp. But the reason why I want to show you is because when you use the cheat sheet, for example, right? If I show you just a quick move, let me have a look. For example, here we have a tweezer top, right? Tweezer top, what happened? The market goes down, right? Here we had a full bullish engulfing, right? Very, very strong Marabozo, bullish engulfing, whatever it is you want to say. We enter, right? Stop loss below and buy whatever you want to go up to. And what happens? Price goes up, okay? Again, let's go down, right? We have a bearish engulfing here. What happens? Price ends up going down. Okay. We have dojis, indecisive dojis, right? Reversal. This could mean reversal. What happens? We have a full bullish Marabozu, right? Come down, indecisive, indecisive, bullish, right? This you could kind of say is a morning star, right? Kind of, right? What happens? Price then ends up going up, right? A nice evening star here, right? What happens? Price goes down, right? If you use the cheat sheet, you will start to see yourself making a lot more profits when it comes to the markets and you'll have better entries. Okay. So we're basically done when it comes to candlesticks, guys. We're basically done when it comes to terminologies. I know this is a very, very long session. I'm grateful that you guys are still listening. And day 2, day 3, day 2 is a little bit boring, but day 3, day 4, the future days are going to be a lot more fun. We are going to go more hands-on into the charts. We did get a little bit of warm up with the charts today, but throughout the weeks, we are going to become a professional at this. Okay. So I don't want to overwhelm you guys today. We've learned a lot. You guys learned all the terminologies. You guys learned everything that you possibly can when it comes to candlesticks. And I'm going to provide you guys the cheat sheet so that you don't have to worry about being lost in the markets and not knowing the patterns that the market gives, right? And on that note, guys, let's get day 3 rolling. I think day 3 is going to be more about technical indicators, but I'll let you guys know later on, maybe on YouTube or in the comments or in the description, whatever it is. But guys, if you have any questions, if you have anything that you want to ask me, definitely put it in the comments down below and I will respond. I promise you guys I will respond. And I hope you guys have learnt. If you have learnt, make sure you like. If you want to be part of this boot camp, make sure you subscribe and turn the bell notification on. We're uploading every single day except to Sundays because obviously I want to give you guys a rest day on Sunday and also myself, but every single day until we are done with the boot camp. So other than that, guys, hope you guys enjoyed and I'll see you guys tomorrow.